Well, yeah, sure. I'm feeling like a small fish in a big tank with such dignitaries here to speak. And I'm really humbled that I have been given the chance to speak before many of them. Thank you. And talking about fish, I believe I'm standing between lunch and you. So, fish lovers here are known for Orissa fish eating. So, please bear with me. So today I'm going to talk to you about ESG in CMA practice or in CMA as a service. I will not dwell upon the macro aspects of ESG because it has already been talked about yesterday and there will be more discussions today as well. Well, looks like the presentation is not coming, never mind. So when we talk about ESG and the CMA profession, what we need to understand is this is not just about legal compliances. This is not just about sustainability for the future generations, because when we talk about sustainability, we say that we have to leave behind something for the next generation. ESG is about here and now. Why? We will see. Firstly, let us understand the E, S, and G aspects. By environment, you are breathing the air in here. It is cooled, cleaned for you. You all have clean drinking water in front of you. You have place to sit. You have enough food waiting for you. Yes? Yes, I have sent. About a week back, in fact. Right? So, having all this on this planet Earth, think of it from the India perspective. We are 17% of the world population and we have a landmass of only around 7%. So how much of a strain is that on this tiny piece of land? So each one of us as CMAs, we know the cost and benefit analysis, we know activity-based costing, right? So considering that, if you look at your day-to-day activities in your companies or in your profession, you will realize that every rupee saved in terms of material is actually some mineral being saved somewhere, is actually some carbon footprint being reduced somewhere. So when we talk about environmental reporting, accounting, it has to do with each and every operation of the business. Similarly, when we consider social aspect of the business, today I would like to thank our conveners here for having enough diversity here on the stage. Like in the last session, we had Manisha. This session, you have me. So we have feminine power. And today's advantage is that I am also partially blind. So you have a disabled person also on this stage. So these are small things in the organization that when you are recruiting, you try and include more women or more other gender persons in your workplace. Does it not involve cost? Don't you have to provide more leaves? Don't you have to provide separate washrooms, separate changing rooms for any other gender? Yes, you have to look at the cost aspect. But how many of us are aware of the benefits of this kind of action? We need to quantify this. We need to report this. It is not just fashionable to have more women in the workplace. It actually has some benefits. And this has been studied in the past at several places. If you look at companies like Chanel, you have a woman CXO there today, right? So considering these things, I would say that social aspect of business is not limited only to the employee welfare or inclusion and diversity at workplaces. It also involves the general public that you deal with, the shareholders as a community, the investors, the management, because they are all people, right? So ESG impact is two-way as far as people are concerned. The companies impact people, the people in turn impact the company. Then the third aspect is governance. What do we mean by governance? Today, I read in the news that Harvard will no longer take foreign students. This is all about governance in the education sector in the US. Let us see how it reflects on us. We as an institute dealing with management, accounting, and costing, I look at it as an opportunity. we have a case here for taking up all those foreign students in our folds. We have the capacity because our courses are available online, our courses are also available offline, and anybody can come from anywhere and learn from us, right? So similarly, governance in companies and businesses is not limited to just following the regulations. It is all about understanding the basics, the ethics that are involved, the reason behind passing those laws, and then calculating the costs and the benefits involved in complying with those laws. It has to go one step beyond. Before the laws are formed, you have to consider what it is that you can do. Let us take the example of 3 companies. When BRSR was first published or notified, for the first year in 21-22, it was voluntary. The companies, the top listed companies could give a voluntary disclosure. So I just looked at Reliance, State Bank of India, and TCS, all 3 of which are in my portfolio of investments. So while going through those BRSR disclosures, I discovered a very close similarity between SBI and Reliance. I framed 45 questions, and I'm glad to inform you I used AI for framing those questions and extracting data out of huge reports, because being blind, it is not possible for me to read so many things. So I found that out of 45 questions on E, S, and G, Reliance and SBI.
Slide. Here also you can see.
Sure, thank you.
Yeah,
Middle one. No?
Yeah.
So this was my original starting point, that we need to report ingredients of ESG in the financial reporting, whereall in the integrated reports, in the management information systems and decision support systems in companies, and in managing stakeholder satisfaction. And what should be the depth and the reach of the reports? The overall aggregates need to be disclosed to shareholders, especially as per the regulations. Then we need focused drill down for decision making. For example, a manager would want to know how much of material saved means how much of electricity saved, how much of carbon footprint saved, right? Then there would be concise summaries for specific purposes. For example, if you're reporting to the Pollution Control Board, then they have specific formats, they have specific drill downs that they will require. Under the Factories Act, you will have very specific questions on human resource management. Now, this is the comparison that I was talking about. So you will see that as far as the environmental reporting is concerned, TCS turned out to be having the most quantitative information in terms of tabular disclosures, whereas SBI and Reliance turned out to be more descriptive. Then if you look at the social aspect,
1 minute.
yeah.
You can stand here and live recording is there.
Yeah, sure. This is okay? Okay. It is not loud. It is okay now? Okay, I'm so sorry, I couldn't make out. So if you look at the social aspect of reporting, then all the 3 companies were doing very fine with giving description along with numbers. Okay? And if you look at the governance aspect, you will find that they were mixed responses. Like descriptive answers were more in Reliance and SBI, and TCS had more of quantitative information. Now, what could be the reasons behind this? The one that I can see is that TCS has been dealing with international clients, it is listed outside India, and so obviously it has had more exposure to all kinds of regulations in the international arena. So that could be one reason. Second reason could be it is a service industry. They already have detailed records because it is very difficult to put together costs and revenues in a service industry. Whereas in Reliance, it's more of manufacturing, so it is easier to trace the material flow and the revenue flows. Then comes SBI. Again, it is a financial services company, And its purpose of inception itself is very different. It is not exactly high profit oriented, it has more of social responsibility. Excuse me. Then, if we look at ESG reporting for decision-making purposes or MIS, you will see that we need to consider the risks and opportunities that are involved in this. Then if you look at the purpose of supporting the propositions that you're making, if you're a cost accountant and you're putting up a proposal for setting up a new plant somewhere, you are doing the project report, you have to look at how many trees are going to be cut down there. What is the distance between the city and the project that you're going to execute? How much will be the carbon footprint of taking all the material and the people to that site? Then it comes the next step that you have to guide the decision makers in the right direction to achieve the complete roadmap of the company. You have a vision statement, you have a mission statement, but somewhere in the business, you get so busy looking at your bottom lines that you lose track that what is the ultimate goal that we have. So it becomes our business to put these ESG factors together, tie them up with the vision statement, and try and make sense out of whatever you're doing today so that it moves in the right direction. Here I have taken an imaginary example of a textile manufacturer who has to compete in today's world. Environmental risk could be like because of global warming, you might have supply disruptions of cotton. So if your cost of cotton goes up, maybe it is an opportunity you have a mixed fabric. What benefits would that give? It would give you lighter material to transport, you would save on your transport costs, and it would add durability to the material. If you look at the social risks, there could be a risk from the trend of khadi or deshi or something. If you're a mill manufacturer somewhere in Maharashtra or Madhya Pradesh, Odisha would be a good competitor, right? So what exactly do you need to do to mitigate this risk? You need to study your B2B customers, find out who their clientele are, and focus on those clientele of yours who in turn are going to use your material. Then comes the governance impact. If you look at the textile industry or any other industry for that matter, the government of India is going in for Make in India. A lot of duties and anti-dumping duties have been imposed on many, many materials. So if your raw material falls in that category, you have to think about import substitution. Look at it as an opportunity as well. You can use it as a branding tool, a marketing tool, that I am using material sourced from India. Then comes managing stakeholder satisfaction. Let us look at the governance aspect. We talked about vision, mission, ethics, policies. Yeah. Then comes the social aspect. We have two sets of stakeholders, internal and external. And then environmental, as I discussed, air, water, this earth, everything falls into that bucket. So we need to identify costs as well as benefits and put them together in one report. While doing that, you will find that there are very few linkages between the costs and benefits directly, because many a times when the costs are incurred, the benefits are not yet accrued. Especially in the case of social impact assessment, we have seen that it takes years to earn the benefits. And many a times when you are spending actually for something that had happened long back. There could be legal cases against companies which you are now paying for. Then there are hidden as well as explicit costs. Right? So this way we have to classify all the expenses and classify all the benefits, link the two together, and put together a summary for our stakeholders. Now let us talk about how to measure it. I feel that we as cost accountants are uniquely positioned because of our cost audit report. If you compare a financial audit report and a cost audit report, you will find that it is easier to understand a cost audit report. This much was the revenue from this product and this much was the profitability from this product. So same thing happens in the case of ESG reporting. You have to put together the qualitative data as well as the quantitative data and put the money values against it. While doing all this, there's a lot of scope for using AI. There's a lot of scope for using data analytics. Okay? Then valuation of ESG cost and benefits and assets and liabilities. Because when we create an asset, like if you have put up an STP somewhere, that means it is an asset, it is going to earn ESG benefits for you over a long term. Again, there are difficulties involved. Like there will be expenses which you cannot really define as current, nor can you defer them. Your accounting standards will say that you have to expense it out in your profit and loss account today. But as a CMA, you will know that no, the benefits are going to come over a period of time. Same thing happens with assets and liabilities. There is uncertainty involved. So we don't know whether it is really going to be that valuable 10 years down the line or 5 years down the line. As case studies, I had also taken up the share prices of two companies. One is our own HDFC Bank and another is Volkswagen. If you see, HDFC Bank has been involved in very, very few controversies, whereas Volkswagen Group, they had faced major litigation and recall of vehicles. Look at the way the share prices have been affected. These are some of the impacts of not controlling ESG costs or not taking into consideration ESG at the topmost level and drilling down to the last person in the organization. Then social management and reporting are important to companies today because they don't only impact the working or the people working in the organization, they impact the company's image. So I would request you to look into these two companies. One is Godrej Consumer Products and the other is Microsoft. Godrej has been in the business for 125 years. Look at the growth. It is slow but steady. Look at Microsoft India. It is a private, unlisted company in India. They started late. They started in the 90s, but they have grown tenfold. Why? Because the social impact is very high. How many of us use Mac? Very few. Microsoft has entered the market early, captured the people's minds, and grown tenfold. Then comes the environmental management and reporting. Again, here I will ask you to look up two companies, ITC and Sterilite. What is ITC famous for? Tobacco and tobacco products. But they are a conglomerate. They do manufacture several other things. Look at the way they report. If you read their annual report and read their website on About Us, it will first talk about FMCG, it will talk about hotels, paperboards, and tobacco products will come somewhere last in the list. Now, same way, look at Sterilite. We all know that Tutukudi plant of Sterilite was shut down because of environmental issues. But the cases went on for years together. Why? Because it is an important industry to the country. 36% of copper demand was supplied by Sterilite. What the company failed to do was report its environmental problems from time to time. Now, why do we need to measure ESG in terms of money? Everybody understands money. But what is the problem involved? Not everything can be measured in money. If today I say that the organizers switch off all the lights and the AC, will you be able to sit in this room, in this auditorium for half an hour? No. So I think I have run out of time. So I will call it a day. I will leave you with the thought that even the laziest person who believes that someone next door should be doing all the ESG can really save the world. You please go to this website and check it out. And in case any one of you needs anything to do with ESG or with any other aspect of sustainability, please feel free to get in touch with me. I do only pro bono consulting, and I try and help whoever is starting a new business as a CMA as much as my little hands can give. Thank you.